All right, welcome everybody. Thanks again for joining me. This is Matt McCall. It is August 10th, I believe. Yeah, August 10th. Let me just get the camera set up here a little bit nicer. I thank everybody for joining me. As always, for a little bit of a podcast here this morning, we have the markets up slightly. The S&P is up at 1/10%, but trading right near an all-time high. And today's show, I'm going to talk a little bit, obviously, about the markets, talk about Bitcoin's breakout with some of the altcoins as well. I also want to talk about just the markets itself at all-time highs, near all-time highs, earnings that crushed it, a couple charts I like to talk about that will give you my idea of where I think the market's going to go this next 6 to 12 months. Also, a few sectors that are looking strong to me, maybe a couple stocks in there. Then I'm going to talk about batteries and a few stocks in the battery sector, one of my favorite investments during the roaring 2020s. And then last but not least, just something that I just added recently, just this morning. Kathy Wood over at ARC, she now sees an opportunity in Chinese healthcare market. So I'm happy to say I was there about 3 years before her because I launched my Chinese biotech portfolio about 3 years ago, I believe. I can pull it up and look. But we're going to talk about that as well. So a lot to talk about today. So we're going to jump right into it. Don't forget on the right-hand side here, you can ask your questions live. I see them coming through. So I kind of look at them as we go, and I'll try to answer some questions along the way. And at the end, of course, I'll take all your questions at the same time as well. So let's just jump into it here with the market. As I mentioned, we're up about 1/10% on the S&P. We have the Nasdaq Composite up just slightly less than that, but both trading a few ticks from an all-time high. And we have the Dow Jones Industrial Average, again, up about 1/10%. They're all about the same. The Dow closed an all-time high 2 days ago, 2 trading days ago, so that would have been on Friday. Everything's trading at or near an all-time high. I mean, that's been kind of the theme that we've been seeing here for quite some time, and it doesn't seem like that's going to be ending anytime soon. I'm still extremely bullish on the market, and I don't see anything changing in the near term. That being said, I want to throw two pretty cool stats I got from LPO Research. Ryan Dietrich over there. If you don't follow him on Twitter, you should. Dietrich, DETRICK. I had him on Moneyline maybe 6 or 7 months ago. Dude's great when it comes to history of the markets. But he looked at the S&P and 6-month win streaks going back to 1950 and back to 1950. And it appears it has happened. I'm trying to count these right now. 2, 4, let's see, 2, 4, 6, 8, 10, 12, 14, 16, 18, 22 times, I think, if I'm counting right. And what's pretty fascinating about it is if you take a look out after a 6-month winning streak, some are longer, but when that winning streak ends, how the market does after that. So the S&P 500, 1 month after that is positive 2/3 of the time. And the median gains 1.9%. And that's only 1 month. So that's a hell of a 1 month return. 3 months after the win streak ends, the S&P is up 81% of the time, so about 4 to 5 times. And the median gains about 3.3%. Again, for 3 months, you average that out. That's much better than the market. And then 6 months later, it's up 76.2% of the time, so about 3/4 of the time. Median gain 6.7%. So again, better than the market return. And then looking out 12 months, the market's up 86% of the time. Actually, it has happened 22 times, but the current one right now is 22. So that means it was up 18 of the 21 times 1 year later, going back to 1950, when you have a win streak of at least 6 months and when it ends. And obviously, if it doesn't end, we keep having winning streaks. We keep going up. So that's a good thing too. So hopefully that continues. But I'm saying once this monthly winning streak ends, and we're at 6 right now, this is the minimum to make the list. The median gains 10%, the average gains 11.9%. And the 3 times it was down, once was in 1961, it was down 0.1%, so basically unchanged. Other was in 72, it was down 4%, and the other was in 80, it was down 7.4%. So again, the odds are in our favor that we will continue to move higher, even if this monthly winning streak does end. So I like to see that. Kind of going along the same lines, the S&P ended July. It was up year to date 17%. Going back to World War II, there's been 12 times that it's been up at least that much. And the rest of the year was higher 11 of the 12 times. And the only time it wasn't was in 1987. We know what happened in October of 1987. And prior to that, through July in 87, the S&P was up 32%. So it was up huge, almost twice as much as it is this year. So again, buying begets buying because stocks are breaking out, because stocks are hitting high. People love to say, it's time to sell, it's time to sell. It's been too good. We as humans take good things and for some reason put negative spins on them. It's just how life is. When it comes to the market, it's going to be very detrimental to you if you do that. The last chart I'm looking at is going back to 1970. And this shows how many 5% pullbacks happen per year in the S&P 500. Fascinating, last year there was 8. So far this year, 0. We can go back to 2017, we didn't have any. Prior to that, we go back to 1995 and 93, and that's it. Going back to 1970. So you're going back 50 years. And it's only happened 1, 2, 3 times. This would be the 4th if we don't have a 5% pullback. So as bullish as I am, could a 5% pullback happen between now and the end of the year? Absolutely. 2 of them could happen for all I know. I have no idea. You look at the average, I'm kind of just trying to do this eyeballing it. It's about 2 pullbacks, 5% pullbacks per year on average. But there's been some years where it's been much more, and again, some where it's been 1 or 0. So last year was 8. That was a big, big number. Typically, after a big number, you'll see it come down for a couple of years based on the last 50 years of history. I look at, and 8 was the second highest ever, going back to 74, and sometime it would have been 08, when the market got crushed. So it's pretty fascinating. I mean, a lot of that had to do, obviously, with the pandemic. Could there be a pullback again at 5%? Absolutely. There could be a 10% pullback. Typically, corrections happen about once a year, once every 13 months. So again, as bullish as I am, and as bullish as I'm going to remain long-term for the roaring 2020s and beyond, you have to be realistic that markets don't go straight up, stocks don't go straight up, and there will be pullbacks. That's all I want to let you know. There will be pullbacks. Nothing in life goes straight up. Okay, so I see your questions coming in. I'll get to those in a minute. Let me just keep going through what I want to talk about here. Let's move over to cryptos for a moment. I'm going to check down here because this is where I have my Bitcoin prices. So around 45,500 right now. Yesterday, I guess last night, it hit around 46,700 change. Sort of pulled a little bit off there, but in the last week, Bitcoin's up 18%. In the last month, Bitcoin's up 34%. In the last year, even though we're well at the high, it's still up 283%, 282 to be exact. So for me, Bitcoin is still a great asset class. Gold is dead. I'm not going to get into it, but gold is absolutely dead. I've been saying that for a long time, and just look at a chart of gold. It's dead money. Stay away from gold. Doesn't mean I don't like other metals, silver, copper, a few others, but gold is absolutely dead money. And I know a lot of people will disagree with that, and that's fine. That's what makes a market. But I'm far, far away from even looking at gold at this point. To me, the next stop on Bitcoin is going to be around 50,000. You have some resistance around there, as I mentioned, or 45,500 now. So that'd be 4,500 to the upside. So another 10% move to the upside. And the altcoin should go up with it. I'm just looking at my portfolio, and about half of it or so is in Bitcoin versus altcoins. Let me see here. Yeah, about half, almost exactly half is in Bitcoin, and the other half is spread throughout a bunch of altcoins. And some of the altcoins are doing great, some are doing okay, some not as well. It's just that's why I have a diversified portfolio of quite a few altcoins in there. But Bitcoin is still my main holding, and I think it hit 50,000 in the next couple of days. I still think it hits a new all-time high above 65,000 by the end of the year. I think it's almost inevitable, and I still think triple digits are still within reach in the near term. But I think a new all-time high will be hit by the end of the year. And people that have been asking about Bitcoin, when to get in, I never knew. I don't know when to get in. I know looking back at 28,000, boy, that looks like it was a gift. And obviously most people didn't buy there; they'd rather chase and buy here. But just keep in mind, I'm still bullish on it, and I'm long term. I don't look at this as a trade. This is something I buy, put underneath the mattress, let it go. And that's just how I view Bitcoin. You don't have to view it the same way. That's just how I view Bitcoin, and a lot of altcoins as well. All right, so we talked about the markets at or near high, still looking great long term. Could be a pullback. But the thing is, I don't know when it's going to happen. We could rally another 20% before we have a pullback. That's why I don't try to time it and try to sell here. I buy on dips. That's the best way to do this. I talked about cryptos. They're rallying right now too. I think 50,000 is inevitable in the next couple of days. If it breaks through there, we could be at a new all-time high before you know it. Moving stocks, let's take a look at earnings here. So far in the second quarter, which most S&P stocks have reported, almost all of them, 85% have beat estimates. However, the average gain the day after reporting earnings has been 0.2%. So they're not rallying on the beats. Q1, the companies were actually down 0.1% the day after. And look at tech. Technology, 94% of tech stocks beat earnings estimates. The day after, they're down on average 0.6%. That's even considering year-over-year growth for the S&P 500 earnings came in at 78.1%. That's the best since the fourth quarter of 2009. We know 2009 was going against the fourth quarter of 08 when the market got crushed in a big bear market before bottoming in March of 2009. So you had really horrible estimates. Don't get me wrong, we're going against horrible estimates now too because of obviously the pandemic. But it's I know a lot is priced in. So it's kind of buy the rumor, sell the news. But what this shows to me is that there is some underlying strength. And the number that jumps out that nobody's gonna be talking about is a net profit margin. The net profit margin came in for the quarter for the S&P companies at 12.4%. That's second only to last quarter, which was 12.8%. And that number they've been keeping since 2008. So it's only been around about 14 years, but still, that's a huge net profit. That means that they're making money. That means based off their sales, they're making money. That net profit's going in the pockets of the corporations, which means they're flush with cash, which means if we have a pullback or interest rates go up a little bit, companies are okay. It's very important to understand. This isn't a 2008 situation. The market pulls back and they're so leveraged out there, the banks and companies, that if interest rates go up or the market comes down or any type of air pocket in the economy hits, you're in trouble because you're so leveraged. It's the exact opposite right now. Flush with cash. That's why so many companies came through the pandemic so strong, because they had the cash to get through it. Well, it didn't hurt that the government was throwing money at people, but they had cash to get through it. Not every company made it through, especially when you look at small companies. Look around restaurants, retail chains that have gone out, gyms, fitness centers. A lot of went out of business. But if you had cash, you can make it through. And right now, companies are still flush with that said cash. All right, before I get into batteries and Chinese healthcare, I want to take a look at a couple sectors here real quick that are doing well. One's consumer discretionary. I talk about it all the time. You know, I have an obsession with Gucci. You know, I bought 2 more pairs of Gucci shoes not this past weekend, a weekend before. I don't spend money on anything though. I'm a saver. I'm frugal. I was brought up that way, and I'll probably always be that way. And I love putting my money into the market because I think that's the best return for my money. That all being said, I do spend some money, and I do like to. I like my shoes and my sneakers, and that's where they go. And watches, which I think are all good investments. So the consumer discretionary continues to rock and roll. I talked about technology already, how the earnings were great, even though the stocks pulled back the day after. Tech stocks, semiconductors, both look great here. Transportation has pulled back quite a bit due to the Delta variant. And I got to tell you, I think there's some great buying opportunities in the transportation sector, whether it be airlines, cruise lines, logistics, trucking. I think there's a lot of great opportunities, and I'm going to delve deeper into that soon. Then we have the healthcare industry here in the U.S. IBB, which is the NASDAQ biotech ETF, closed at an all-time high yesterday. It's down 1% today, but intraday today it hit the best level ever intraday. And what's fascinating about this is you look at IBB, then you look at XBI, which is the Spider's S&P biotech. IBB is a NASDAQ biotech index. What a difference in indexes, because XBI hit about 175 in February. It's at 127 right now, well off the high. So it just shows when you buy into an ETF, make sure you know what you're buying into, because then you have the Invesco Dynamic Biotech ETF, PBE, Paul Boy Elephant, at $76 off the high about 84, but well off the low in the middle. So the three are completely different and completely different holdings. So please keep that in mind. And then you have, like, take a look at the ARC Genomics ETF, ARKG. Again, well off the high, hit 115. We're at 86 now. So three completely different returns because there's three completely different holdings, group of holdings, portfolios. Very important. Always look at your holdings. Always, always, always. So important. But those are sectors that I believe are doing really well. What's next? Let's talk about. I want to do batteries and dive into a bunch of stocks in there. But before that, let's talk healthcare here, and I'll talk more about this potentially next time I jump on. But Chinese healthcare, and the only reason I bring this up is I just got an email right before the show, and Kathy Wood's ARK Investment. They say they believe there's an opportunity in Chinese healthcare. And if you Google that, you'll be able to see that they have a little paper on their website, ARK Invest, ark-invest.com. They have a article called "Chinese Healthcare Appears Ripe for Digitization." So if you want to log in and read that, it'd be nice, good way for you to catch up on that. So I'm just pulling something up here, though. I wanted to talk about, and it's going to be a little bit of a brag, if you will, because me, not anybody else who whose name may be on it, I came up with the Chinese biotech portfolio back on April 17th, 2019. So almost 2.5 years ago, let's call it. Before Kathy Wood, before her. And you take a look at the stocks in there. Zylab, ZLAB, up 437%. Bigene, BGNE, up 165% since then. Sold Viva Biotech a few months ago with 105% return. And then there's Ascletis Pharma, that's down 51%, but on average, up 164% already. Now Kathy Wood's getting into it. So again, I don't want to brag. The reason I say this is sometimes people think I'm crazy because I am very early into trends. And to me, this trend is still extremely early. And there's two ETFs that you can play this with. If you want, I'm not an ETF fan. I think you build your own. I think it's the best way to go. But there is the Lawn Car, which I like, Brad Lawncar, who's based on his index. The Lawn Car China Biopharma ETF, which is CHNA. Pulling back from the highs, but not bad. Doesn't really trade much at all. That's the one I tried to buy down in the high 30s when the Chinese stocks were getting crushed, and now it's around 42. I wish I would have had a huge trade in, but I couldn't get filled. It doesn't trade enough. It's only traded 600 shares today. And then the other one is, I'm trying to see if I can remember what the symbol is. Let's see. Oh, CHB, China, Hong Kong, CHB. And again, China. This is the Global X China Biotech Innovation ETF. Trade 200 shares today. So they don't trade much. Their holdings are similar, but they are different. But those are two things to look at. But I would think you could rather build your own. So I'm going to give you the highlights from this report. ARK came out, and this report came out today. So it is really, really new. And they talked about how China has been basically digitizing everything, but most countries have in the past decade. E-commerce, technology, everything else. Healthcare has not yet been digitized. Here in the United States, we're still behind as well, but we are ahead of China in that one aspect. But China doesn't like to be behind us in anything, so they're spending tons and tons of money on it. ARK believes that the online medical consultations in China can increase from 6% of revenue in 2019 to 50% by 2025. That'd be a $1.5 billion to $50 billion. That's a huge jump. They also see overwhelmed physicians and underfunding, which will lead to more money going into it. According to the firm, the Chinese physicians, they earn about $14,000 per year on average, or just over 1.5 China's per capita GDP, whereas U.S. and Canada doctors make 4x. So you definitely see that they're underpaid there, or maybe they're overpaid here. Who knows? And right now, you see Chinese healthcare expenses are about 6.6% of GDP. And this was part of my story when I did this almost 2.5 years ago, was that China had said back then that they want to increase the amount of their GDP that they put into healthcare. You look at the US, we're at about 18% of GDP. Germany's 12, 13%, France 12%, Japan 12%, Canada 12%, UK 11, Brazil, Australia 11, 10, Italy 10, South Africa, Korea, 9, 10, way behind, folks. So China's way behind, and they need to get back up there. So you're going to see a ton of spending. There's really this huge disconnect because China's such an innovation led country, and they've been backing, they've been behind everybody when it comes to that. So they listed a couple stocks they think that could benefit, and I have exposure to all three of these, as a matter of fact, in different ways. Ping An Healthcare, Alibaba Health, and JD Health. So you probably heard of Alibaba and JD. So it's a health arms of them. Ping An, you probably heard of them. They're a big insurance company. That's their healthcare arm of them as well. So again, I'd go to find the full report on Art-Invest. It's a really, really great report. All right, before going to batteries, I'll take a couple questions here. I'm actually going to go from the most recent one and go from there. Somebody asked about Leafly, which is a marijuana company that's going public via SPAC. I think the announcement was yesterday. The SPAC they're merging with is MCNJ. For SPACs right now, they're not going to move until they're almost close to the actual merger going through. It's just the way it's working. Definitive agreements, which is a DA, which means that they announced that they have an agreement to move forward, aren't doing anything for the SPACs right now. So I'd stay away. And Leafly, I don't know too much about, but I'd rather just look at the actual marijuana companies in the U.S. I think there's much better opportunities in the pullbacks that we've seen right now. Again, I'm just going through our most recent ones. Africa Growth Corp, AFGC, somebody asked about. I know nothing about this at all. I apologize. I know nothing. It doesn't trade much at all either. Yeah, I don't know. I'd have to look into that one. Hive, which is obviously people ask about this one a lot, HVBT. This is a blockchain company, crypto, closed at the best level yesterday in about 3 months, down about 2% today. Nice breakout, big volume coming in. Stock looks good here. But it's going to go the way of Bitcoin. So it's going to go the way of Bitcoin. Smile Direct SDC getting crushed today. Had some poor earnings. I still like the company, but man, oh man, people do not like it. I still like it long term as a way to play millennials and younger people getting their teeth fixed. It's a much cheaper way to do it. So they kind of had two big things come at it. They had a cyber attack which hit them a little while ago, which had an effect on earnings, which you're seeing the earnings come through today. They missed analysts' expectations on top bottom lines, and they cited April cyber attack as well as other factors. So of course, JP Morgan, all these other companies came out and they slashed the estimates. They had a second quarter loss about 14 cents a share on revenue of 174 million. So revenue wasn't bad, but they're looking for a loss of 12 cents on 198 million. So obviously it came in a little lower than expected, but they still expect to have revenue between 750 and 800 million this year, kind of right in the middle of the range of what most analysts are looking for. And you look at Smile Direct Club and the size of it right here, it's only a $2 billion company and expected 750 to 800. So it's not expensive by any means, but there's a concern about the attack. They had a lasting economic effect from COVID. People now, I mean, damn Baltimore, you have to wear a mask when you go inside now, again, as of yesterday, day before. Ridiculous. But so that Delta coming back or concerns of it, I don't know, whatever you want to call it, combined with the fact that people just aren't rushing back to the dentistry to get their teeth fixed, along with a cyber attack, has been a major issue for this company. Again, I still think it makes it long term, but boy, it looks pretty ugly here in the near term. So I'm holding here and we'll see how it goes. Oh man, a lot of questions coming in. Thank you. I'm obviously not going to be able to get to all of them. Let's see here. Trying to find ones I didn't talk about last week. We want to keep it new. Obviously, a lot of people asking about MCMJ, which, like I said, Fulgent, FLGT. They came out with earnings and announced a acquisition last night. Stock's down 15% in the news. I didn't think the news was that bad. I mean, honestly, their non-COVID business is growing really well, and obviously, it's driven by COVID testing right now. That's why the company's gone bananas. But I originally recommended this at $6.66. It's now at $92.64, even on the pullback. I mean, this was a huge gainer for us. I kind of like it down here. I think it's fine. I still think it's got a big upside potential. All right, let me go to batteries here. It's about 25 minutes into the show, and I want to talk about batteries. And because batteries are one of my favorite investments going forward. And there's a couple way to look at batteries. There's two ETFs out there, similar but not really. There's the Amplify Advanced Battery Metals and Materials ETF, symbol BATT, trading just below a high. And there's one that's been around a while, which is LIT. And that's a Global X Lithium ETF, and that's trading just off an all-time high. Just recently broke out to a new all-time high. It's had a hell of a run in the last couple of years. So I looked at some of the holdings on both. I'm going to give you an idea of kind of a couple that I like. The top holding in BATT, and one of the largest battery companies in the world. They call it CATL, but it's contemporary. There's another thing they call it. It's a long name. It's a Chinese company. It trades over in China. So if you have Interactive Brokers or another firm that lets you buy stocks overseas, which I think you all should have one. I use Interactive Brokers personally just because it's really easy to buy them there. They can do the currency conversion for you, so you don't have to do it. It's easier. I mean, you pay a little bit of a commission for that. Obviously, it's not free like buying in the U.S., but I think it's worth it for diversification. So CATL trades over there. The symbols, their numbers over there. So it's 300 750. So 300750. They're expected to grow their top and bottom line 28% in the next couple of years. The last 5 years, the stock's already up over 10x. It's had a hell of a run, and this is a big company. This is a real big company in China. So, it's such a leader and China being a leader when it comes to electric vehicles and one of the leaders in battery technology. I think it's got a huge upside potential. It trades. I mean, it's a big company. So it trades at about 1.2 trillion yuan, which is going to be about 190 billion. So it's a big company, and I like it. I think it's one of those core holdings when it comes to batteries. Tesla's also a top holding in that as well, because obviously they have battery technology. The company recently broke above that 700 levels, consolidating. I like Tesla long term. You all know that. Another Chinese one that does trade here, so it'd be easier for you to buy, is BYD. And the symbol is BYDDY, BYD company. They're involved in electric vehicles. They're also involved in battery technology. Stock at 35 and a pullback in May, back around 70 now, which is a double top at an all-time high. I really like this company. I've liked it for a long time. I'm pretty sure I had it way back in the day. I mean, this was down in single digits. Boy, I wish I would have held on to it. I did not. So this is one I like long term as well. And again, this is a Chinese company as well. BHP, it's a materials play. It's BHP Billiton. They make all their industrial metals and minerals, all types, and it's done very well. It's got copper, it's got everything else, but it's a supplier of materials. Break above 80, this can really take off. So that's a way to play that. NEO's in a top holding, and everybody knows I like NEO. That's basically they call it the Tesla of China, but I think it's its own beast right now. It's one of the leading EV companies in China. I really like NEO. Glencore GLNCY, foreign company, but trades here as an ADR. This is another minerals play. Stock looks great. I like it up here. Samsung SDI. There's a lot of Samsungs, but Samsung SDI, it's a Korean company. It doesn't trade in the United States, unfortunately. Big battery player. So it trades over in a KOSPI, which is the Korean index. And the symbol over there is A as an apple, 006400. Two others that I really like in China don't trade here: Yunnan Energy, YUNNAN, and EVE Energy. Both play really good plays on battery. Varta, VARTA, which trades over in Europe, is a nice play. And so there's a lot of international plays. And another one that's recently got some play is Freyr Battery. It trades here in the U.S. It was a SPAC, so most FREY. It was a SPAC and it fell down below $8, and then suddenly started getting some play with some of the big brokerage firms, and it ran from $8 to $12.70 in the last week and a half. Today it's up 4.6% to $12.70. Very interesting company. So it's one that I haven't done my deep dive yet. I will. I'll update you on it, but it's very interesting. But to give you an idea of some statistics of why I love batteries, let's take a look at some big picture stuff, because we're investing in trends, folks, right? So we need to look at what our big trend is, because That's how we're going to make money. The demand for lithium ion batteries globally, it's forecast to go from 241 gigawatts per hour to nearly 5,300 gigawatts per hour from the end of 2020 to the end of 2030. So during the roaring 2020s. Put easily, it's a 22x increase. There's going to be a huge shortfall in that time frame. It's amazing that it's such a big demand. The announced production capacity in 2030 is about 1,600 kilowatts per hour. They're expecting demand to be 5,300 kilowatts per hour. Do the math. That's like 4x or 3.5x. Sorry, 3.5x that. That's a huge, huge shortfall. To make up for that shortfall, you would have to have 15 gigafactories, each producing 32 gigawatts per hour. I mean, you take away China, there's going to be a shortfall for battery cell production as early as 2023. That's 2 years from now. Just think about the explosion, that how much battery technology and storage and power is needed for electric vehicles and all the other stuff out there. Homes, you name it. It's unbelievable to me. That's why I think there's huge opportunity in solid state battery outside of lithium ion batteries, because the problem is not only is there not facilities to produce them, the materials that go in them are very difficult to get, and there's a shortfall. Bottom line. So in 2020, I just talked about CATL earlier. As far as battery cell deliveries to hybrids, plug-in hybrids, and EVs, CATL had about 26% market share. LG Chem, which is also a Korean company, had about 25% market share. Panasonic's at 17. I talked about Samsung SDI. It's around 6.6, so it drops off. SK Innovation, another Korean company, at 6%. BYD, I talked about 5.6%. Envision, which is a Asian company as well, 2.3. And then a couple small ones, and then the rest are about 20, 30, 20, 22%. So there's a couple of big players. About half of the battery cell deliveries are from CATL and LG Chem, just so you know. LG Chem, again, doesn't trade here. It's a Korean company as well. So big, huge opportunities when it comes to batteries, in my opinion, and one of my favorite investments. All right, so let's go to your questions. See if you have any questions. Of course, I knew this was going to come up. Ilika, which is a small company I recommended a long time ago, was only worth about $20 million. That's right, $1 million. It trades here. It didn't trade here when I first recommended it. It only traded in London. It now trades here over the counter as ILIKF, and now it's about a $327 million company. So way bigger than when I recommended it. Yeah, I still like it long term, not as much as I did. A lot of it's been priced in. There's a lot of other bigger players. Probably time to maybe take some off the table and move on from it, and let some profits go, or bank some profits, let some house money play, is kind of how I view that one. Another one or two others in there I just saw come through. QS is QuantumScape, which is a solid state battery company. It was a SPAC. Ran from 10 to 130. Now it's down to 23 and change. QuantumScape's had its fair share of issues, to say the least. Could they eventually come out of this and be a huge company? Sure. It's a $10 billion valuation right now. The problem is, looking forward, it doesn't really have much as far as guidance. It's going to continue to lose money for the foreseeable future. It needs something. It's got a lot of huge backers. I get that, but it needs something to get it moving. And I don't see much moving it right now. So it could be dead money for some time. Somebody's asking about Murata, which is MRAAY, Murata Manufacturing. It's a Japanese company, which is involved in electronics, and some of it is with batteries as well, solid-state batteries. Pulled back from the high that it hit earlier this year, but boy, it looks good here in the low 20s. I still like that as a long-term play. And I like Japanese stocks right here as well. So it kind of adds to that as well. Let's see what else people are asking about. This MNMD, Mind Medicine. This is one of those psychedelic companies. I haven't been following them. I just don't know the future. That's probably so far down the road. Very volatile. I just haven't been following those. BGRY is Berkshire Grey. This was a SPAC. Pretty interesting SPAC too. Um, it's got a pretty cool business model. The problem is it just does not act well at all. You know, it's a smaller company. It's less than $2 billion. But you know what I like about this is it deals with the future of logistics and of manufacturing and warehouses. They have robots that help automate the whole supply chain issue that a lot of companies are having. But again, struggling. I can't get out of its own way. So until it finds a bottom and does something, I would stay away from it. Not trying to catch a falling knife on that one. Let's see. Cerence. I love Cerence. This is one of my favorites. I talked about this last week, maybe a week or two ago. Had great earnings the other day. It was up big. It's up a big again today. It's up another 7%. They won 22 and change. This is AI voice activated transportation stock. It's a leader in there. I like it a lot. I think that's one that you definitely a nice long term play. Two in the sports gambling, both DraftKings, DKNG starting to come back. I like it. Rush Street, RSI, some good numbers starting to rally in the news as well. Both long-term plays. The future of sports and gambling are going to be so different in a couple of years. It's going to be so interactive. Both stocks positioned very well, in my opinion, for that. There'll be a lot of winners in there. HYSR, Sun Hydrogen, it's a penny stock, not my thing. I don't know anything about it. PCOR, I'm literally just looking at symbols and pulling them up. Procure Technologies. I don't know anything about this. It looks like a software company that went public in May. Let me see if I can pull up any information on it. I don't know this one. It's very rare I don't know something about a newer company, but I will be honest with you. I don't know much about this. It's about a $13 billion cloud-based construction management. But I like that with all the construction that's about to be going on. Enables the construction industry, such as owners, general contractors, etc., to collaborate in construction projects. Boy, building a house in Nicaragua, I wish they had that. Operations all over. It looks like all over North America, UK, Ireland, Australia, New Zealand, Singapore, UAE. Very interesting. I'm going to have to look into that. Thank you for sharing that. Last year at 400 million in sales. By 2023, looking for 750. Losing money still the next couple of years. So it's not cheap. You know, at a $13 billion company, it's not cheap. But it's one. I'm writing it down right here. You can see. I'll do a deeper dive into it. But thanks for sharing the idea. I didn't know. I don't know that one, but I really like it where it's kind of sitting. Largo, LGO for battery. You know, this isn't really battery storage. It's a material minerals play. Yeah, I don't mind Largo. I don't mind it at all. LOTZ. What's this? Carlots. That just looks ugly. Yeah, I wouldn't. That looks really bad. I haven't looked at it in a while, but I don't like it. KPTI. People always ask about this. I had bad numbers last week. I talked about it. It's still going down. I mean, I still think there's an upside to it, but I'm wrong a lot. So who knows with that one. Canopy Growth and Charlotte's Web. I mean, I think they're probably dead money right now for a little while. I like the U.S. ones much better. The U.S. base, I think that's where you're going to see all of it. Wish, which is context, logic, wish.com. Again, just not acting well. I'd stay away from it. And, you know, keep in mind, China, Asia, they're tough on that right now. So I would stay away from that one right there. Somebody says Kathy Wood recently loaded up on Path, PATH, which is UiPath. I like UiPath, but again, it hasn't acted well. But I like UiPath. It's a little rich for my blood, but I like it. Roku. People know I don't like Roku, so I'll stay away from that one. Which is Unity Software. I love Unity Software long term. They help make all the guts that go into all the games that you play on your phone. I really like that company. And then Hood, which is Robinhood. I mean, that's a meme stock really for the most part. Now, I think that company sucks, and I think they'll disappear at some point. So I would go nowhere near Robinhood at this point. Palantir, I still love Palantir. Schrodinger, still love Schrodinger. Um, Vips, which is Vip Shop. Very similar. It's just getting hit with everything over there right now. Just got to stay away from it. I don't want to try to catch a falling knife when it comes to retail over there right now in Asia. Lucid, I mean, who the hell knows with this thing? This is such a hype stock. I would much rather own Tesla. I just think it's a much better company. DMTK, Dermatech, had a huge run December into February, kind of going sideways now. Yeah, I think there's better plays out there. PI, Impinge, I still like Impinge. It's all about sensors. Sensors are all about Internet of Things, connectivity. It's come off the low of 40, so it's looking pretty good here. Let's see. I'm going to take a couple more. We're about 41 minutes in, so I'm going to take 5 more quick ones. And let me go back to the beginning and see if I missed any here in the beginning. A lot of the same stuff. VRRM was one of them from the beginning. Vera Mobility Corp. They reported earnings last night. Huge huge freaking numbers. Up about 9% today. It's trading here it hit a new all-time high this morning. So very small company, but I like it. I like that a lot. PLNHF, which is Planet 13 Holdings. You know, again, this is this is a U.S. play. It's got the big retail facility in Vegas, which I went to about 2 years ago when I was out there. Really cool facility, but I'd rather have more of the vertical players from top to bottom, and that's not one of them. So I kind of stay away from that. Lemonade, LMND. This is the insurance play. You know, this was a hot IPO back in the day. It ran up. I've stayed away from it, and I'll probably continue to stay away from it at this point. Let's see here, GLEO. This is a SPAC that is going to be merging with a 3D company, 3D printing company. I'll wait and see what happens then. Again, a lot of them aren't moving until that happens. Fiverr I talked about last week. It's not acting well. And one more, I'll do PayPal here, PYPL. It's down 1.6% today. It's off the high of 310. It could pull back a little bit more. I think it could test a 200-day moving average on 255, 260. But I love PayPal long term. I think it's a really great. I like the acquisition of Afterpay. We had Afterpay. Had Afterpay. Sold it into that rally. So, Square bought Afterpay. Square bought, not PayPal. Square bought Afterpay. So you know, long term, I like Square. I like PayPal. I like a lot of the future of money, if you will. So, everybody, thank you so much. We had a really good crowd today. Triple digits. Spread the word. I hope to make an announcement soon as to what's going on. Trust me, if I could tell you anything, I would. Yeah, I'm beyond frustrated myself. Please just keep following. We got a lot of good stuff coming, and if things don't work out, we're gonna launch our own thing here. We got a lot of good ideas coming. So keep watching. I'm gonna be with you in one shape or form throughout the Roaring 2020s. Finalizing a book. It should be out end of October, I hope. I got to get some other things I'm adding to it, but it's looking good. But again, please share it. Thank you so much from the bottom of my heart for continuing to follow me. I'm here for you. I'm not going anywhere. Keep in mind, if you ask me personal questions, if you send me messages on Twitter, I can't tell you what to buy and sell. I can't give personal advice like that. Just generalization of ideas. Just keep that in mind. If you send me a message, that's why I can't get back to you. But we will make an announcement very soon. The moment I can, you'll be the first to know. We'll do a special video. But again, have a wonderful rest of your week. What's today? Tuesday. Tuesday. Thank you so much. Go out there, smile, be safe, have fun. It's still summertime, and I'll do one later this week. So maybe Thursday or Friday, we'll jump back and do it again. Get your questions ready. Thank you so much from the bottom of my heart. Appreciate it. Have a good rest of your day. Thank you so much.